Trends in Fulfillment Centers and Logistics Technology. I'm here today with Aaron Alpeter. He is CEO and founder of IZBA. Hi, Aaron.
Hi, thanks for having me, Bob.
And thank you for being with me. So let's kind of take a high-level view of this. Tell me, what do you think the next 6 to 12 months is going to look like for fulfillment centers in general?
Yeah, I'm really concerned about a fulfillment center apocalypse. And
wow.
Yeah,
that's a strong statement.
It is, but let me talk about why. I think when you look at what happened over 2022, we had massive e-commerce growth and massive inventory growth. And as a result, all the 3PLs tried to buy up as much space as they could, often at elevated prices that they really shouldn't have signed. And now we're in a situation where they have 3, 5, 10-year leases, assuming that the inventory levels that they had were going to be as high as they're going to be going forward. And so the challenge is that all of the startups, all the e-commerce companies that I work with have de-inventoried over the first half of 2023. And to make things worse, there are a handful of startups that are about to go under, simply because they all waited for funding to come through in the back half of this year. I think the reality is that not all these startups are going to survive. Mm-hmm. And so the challenge here is that you have a fairly low margin business to begin with in fulfillment. And if you have a couple medium or large fulfillment clients that don't pay their bill or are late on paying their bills, then suddenly you're in a situation where they can't make their mortgage payments, and you could have 1 or 2 clients that ends up bankrupting or shutting down an entire fulfillment company.
The domino effect.
Yeah, so that's really what I'm worried about. I think there's a lot of work that people are doing to try to have mergers, try to shed assets as much as they can, but it's certainly going to be a difficult time.
So everybody kind of rushed into the market when there seemed to be this opportunity for new demand, the need for services, and then when things started to slacken off, they all get caught out. Basic problem with business 101.
Yeah,
right.
It's a factor of inflation. It's a factor of interest rates. It's just everybody didn't know how long the COVID game was going to continue, and it stopped a lot sooner and a lot suddenly than people thought.
Well, how important is the inflation aspect in terms of raising the costs and making it untenable for them to continue these businesses? Was that serious an issue?
Yeah, I mean, the way that we combat inflation is by raising interest rates. And so if you have variable loans, your costs are much higher than they were a year and a half, 2 years ago. And even when you start looking at venture funding and startups, if you're doing a thesis off of 1% interest rate per year, you're going to take a lot more riskier bets. But if you're guaranteed 5 or 6% just by the federal funds rate, the threshold for what a startup needs to have in order to raise is much higher.
Do you think that the appeal in general of logistics-oriented startups is starting to fade with investors, or are they still excited about the space in general?
I don't think logistics tech is going anywhere, but I think that what you're finding is that people who are excited and were pitching $1 trillion idea now have to back that up and have to say, okay, we're going to focus on a $10 million idea.
Mm-hmm. Okay, so what are some of the let's talk AI specifically, some of the practical applications of artificial intelligence in these facilities you've seen. How is that manifesting itself today?
Yeah, it's really way too early to say if AI is going to take over things. I don't think we're in a situation anytime soon where we'll only have robots and we'll only have AI doing fulfillment or even aspects of supply chain. Mm-hmm. The way that I look at it is those digital aspects, things that are done behind a computer, those will be the first things that are augmented by AI. I really think it's going to be AI augmentation versus AI replacement of labor. Mm-hmm. So I imagine things around forecasting, around risk assessment for different clients or different companies. Those are the aspects that I think AI will make a big impact in first.
But AI is going to have a strong impact within the 4 walls of a warehouse or a distribution center, correctly, in terms of monitoring the performance of workers, how they're doing, where they're going, what they're doing. I mean, it seems to me that that's going to be a huge deal going forward, or not?
I think that will be an element. I think what you'll see first is more focus on the outside of the 4 walls first. And so what I imagine a company that needs to be created at some point is a way for a fulfillment center to score different clients coming in and which clients are the risky clients, or which brands should they take on, should they not take on. I think that if you're able to combine multiple disparate parts of aspects of data with some intelligence around there, you're going to find fulfillment centers be a lot more selective with the brands that they're taking on. Mm-hmm. And as a result, for what we just talked about, you're going to avoid these companies that may be pitching a good idea that are funded specifically by VC money that may not have a defensible business underneath.
Because here again, we have this idea of everybody getting all excited about something new. about AI and the dazzling aspects of the technology. They all rush in. Maybe they don't understand the use case or the reason for it. Maybe they'll overspend and adopt a technology that doesn't really fit them. Is that a problem or a possibility?
It could be. I think that the challenge with any software solution, whether or not it's AI or something different, is that most people will try to have a black box that just solves everything. And the reality is that most buyers don't want to buy a black box, right? It's hard to build that level of trust with the buyer if you say, hey, this is going to solve all of your problems.
Because a black box doesn't explain how it came to the conclusion that it came to. You don't understand why it's saying what it's saying.
That's exactly right. And so I think what you'll find is that people will want AI augmentation. They want to be able to create that process in an analog environment first, and then be able to automate different aspects of it that they have themselves locked down and said, this is what we want to do.
So you seem to be suggesting, Aaron, that maybe we're going forward, despite the pain that we're feeling now, that the post-apocalyptic world of fulfillment centers might be a more realistic world in which supply meets demand better, technology is better utilized. I mean, tell me about what the post-apocalyptic landscape looks like to you once everything's settled down.
Yeah, I think there's some core trends that won't change. One, e-commerce is growing. It's going to continue to grow. We're not going backwards. Two, regional fulfillment and being able to be close to the customer, those are all going to be there. I think what needs to be reset is some of the cap tables and some of the debt structures that some of these fulfillment providers have. And so there'll be some pain where there will be lots of consolidation or outright closures of fulfillment companies. But as a result, the companies that will emerge from that will be stronger and will be a little bit wiser to work with the brands that need to work with.
Thanks so much, Aaron. I really appreciate this conversation, but I'd like to take a moment to ask you just for a short time about IZBA. Who is IZBA and where does it fit into this picture?
Sure. So IZBA is a consulting company. We work with startups. Basically what we do is we improve the profitability and cash flow of different startups by fixing their supply chain. And part of IZBA is we've built this portfolio of other companies which we own. We have Sourcify, which helps brands lower their COGS. We've got a network of about 3,000 factories around the world. And so if you're buying a widget for $10 today, we can go find it for $8.50 and sell it to you for $8.60. And then lastly, we have Capable, which is a software product that we rolled out of IZBA, which basically helps brands hold their 3PLs accountable. And so think about automated scorecards around on-time fulfillment or order accuracy that helps brands just figure out if their 3PL is good or not, and if they're doing what they said they should be doing.
Thanks a lot, Aaron. I really appreciate your time.
Thank you.
I've been speaking with Aaron Alpeter of IZBA. Thank you very much for watching.